Are we live? Are we live?
We're live and in living color.
Ladies and gentlemen,
We're ready to go. You knocking everything?
I
out,
am.
right?
Okay. Well, I sound fuzzy in my ears, so I was trying to make sure it was right. But if I sound good to you, sound off and let us know you're watching. It is our cash coaching hour where we get into it each and every week. Thursdays about noon 30 this time on East Coast time. We're in the northwest corner of the state, and I think there is a fire advisory out there. Things are getting hot and heavy in our neck of the woods, and we're going to cool you off by throwing a couple dollars at your problems. How about that, Jonah?
Sounds pretty good. I think we should take a quick second to let everybody know why we're here. And also, we've got one coach joining us here this afternoon. He goes by the name of Jesse W. Durham.
Do you ever use your middle initial?
Not really. Not really, I don't. Jesse, why don't you introduce yourself, tell everybody where you are and who you are and why they should pay attention to you for the next couple minutes.
Yeah, absolutely. I saw where somebody on social media posted recently that for anybody who uses a middle initial, they're a pretentious type of person. So I'm not asking for confirmation on that, by the way, from y'all, but that's what I saw on social media. My name is Jesse W. Durham from North Carolina, and we teach people how to save and spend money at the same time because we learned how to do it. So I learned about the concept back in 2015. And I've been applying it and helping other people over the last 10 or so years now.
Love to hear it. Ladies and gents, that's right. The Cash Compound is a community where we teach the culture of cash flow, code cracking cash flow out here. The save and spend system is our simple system to help you, just like Jesse said, save your money, save the dollars and the income that comes into your life and put it in the right place. And we teach you how to still spend money while you have the dollars that you made. It sounds wild, but if you need to get right to it and you don't want to listen to us, go to saveandspendsystem.com and start the journey by watching the free video we have there for you. And then let's get into a one-on-one conversation. In the last week, Jonah, you know how I always like to ask? I like to go to the mailbag. Let's see what's going on in the DMs. Let's see what people have been asking us on the phone calls. And let's be reminded, we are taking phone calls this week. Yes, you've talked to real people all across North America about their cash crunch and cash flow problems and their credit card issues. Yes,
I have.
Well, tell us what's on your mind then. Who's been wondering things and what questions, comments, and concerns do people have in April, first week of April, 2025?
Thankfully, I didn't get any April Fool's calls. That would have made me sad. But we do have a question here from Navigate Your Ventures. So I'm going to read that one. Let's address him first. He was on time for our live. He sent this in at 12:04.
Oh, they're ready.
Even though we wouldn't start the live till just a few minutes ago. So he says he loves how whole life goes with IBC, the infinite banking concept. He's curious how to throw a HELOC in the mix and move the money from a business LLC back to the HELOC or a policy without commingling the funds. And he's asking, what creative ways do we use?
Oh, that's a great question. So first off, they are compatible. And we have had many people have a love triangle between the money that comes into their life, which I've called income so far today, the money you want to save, you want to keep. Number two, a HELOC, a line of credit for your business, for your home, something like that you're utilizing because you have equity or you've borrowed against your business with a business line of credit at a bank or some third-party institution. And the third part of the triangle is your infinite banking policy. When we say infinite banking concept, we are talking about utilizing a product of whole life insurance, just like they said, for a process of control. Remember the culture of control of your cash flow. So yes, they go together first off. Now the nuances and specifics of your situation should be talked through with your coach, but I know Jonah for years has helped people navigate the love triangle between HELOC, IBC, and income.
Yeah, I talked to somebody maybe 2 weeks ago now that's got a HELOC and that's looking to start a policy with the HELOC. Actually, a couple different people. I've got a young lady who's starting a policy on her mom, herself, and her daughter, and they've got some money coming out of the HELOC in order to do that. And then I talked to another gentleman that's got a big number coming out of a HELOC. He's had this HELOC for a long time. Normally, there's like a 10-year draw period on the HELOCs, but he's had this HELOC for a while, and he's saying he wants to now utilize those funds. So that'll be fun. So we talk about that all the time. Navigate Your Ventures. If you'd like to, just reach out to us, give us a call, and I'll walk you through your specific situation. There's also some differences if you've got a business that owns your policy as opposed to just individually. So we can talk and walk through that also. There's some really cool things we can do there. I helped somebody just change some ownership on their policies. They started them as personal owned. They wanted to change the business. We did that in the last week. So lots of cool things, lots of fun.
There's a lot that just came up there with that great question. We want to remind you guys that you can give us your questions, comments, and concerns in the chat. If you're listening to us live, throw it in and drop it in right now. Jesse can't even stay long. He's talking to a client, I think, in just a few short minutes. So we'll go to him next. And I heard about borrowing against assets, Jesse, which I've heard from Rich Dad Poor Dad. That's what the rich do. They borrow against. The first thing you do with your money is you put it into places where you buy assets. And the middle class tend to buy liabilities, and the lowest class, they tend to just spend it on expenses. Have you seen that, Jesse, have you seen that pattern to be true in your life and in the people that you've been coaching very recently?
Yeah, definitely on both. Definitely in my life, definitely in other people's lives. So if we use the framework from Kiyosaki, where he talks about cash flow, and we talk about cash flow, obviously, and then assets versus liabilities, I was definitely very much in the liabilities column, just being a teacher in the state of North Carolina back in 2015, and the car, the student loans, the credit cards. Now I was doing some other things that I thought were good as well, which was investing in our 401k, and we had a state retirement, but we were definitely just doing traditional things, spending everything that we earned. Whereas when I was exposed to IBC, I saw a way to have our cash flow be directed towards an asset that had guarantees, control, and access to the capital that was in that asset for the rest of our life. And then we would use cash flow from that asset to do the things that we wanted to do anyway, which for us was pay off debts, go on vacations, pursue other investments, build a business, whatever it is that we were going to do. And yeah, talk to people all the time about what it is that they have going on in life. And those are good filters to look at. Cash flow. How much of your cash flow are you keeping? Are we focusing on assets to cover the liabilities? All that stuff you just talked about, for sure.
Love to hear it. So, Jonah, have you heard about this strategy that they say? Not sure who they is out there, but okay. I see him on TikTok. They. I see him on IG. They. On X and Twitter, I see they. The strategy of buy, borrow, die. Have you heard of that strategy? And does that apply here?
Particularly seen that strategy. So you might have to walk me through what they're talking about when they say buy, borrow, die.
We're talking about the wealthy and the rich here. For the last 200 years, we know that whole life insurance has been a great strategy for being able to save your money.
Yep.
And be able to leverage the money that you have saved.
Yep.
Okay. So buy would be the rich people in the Robert Kiyosaki Rich Dad world. They buy assets first, rather than have the liabilities like Jesse in the middle class, rather than having just expenses like the poor,
which I understand.
Okay. So they buy assets first with their money.
Borrow against their assets.
They borrow against those assets.
Okay.
And when they die, they transfer the ownership of those assets to the next generation, and they eliminate their taxes.
Oh, okay. So I have heard of this before. So forgive me. That was just
right.
Out of left field. And
I'm just hitting you with the jargon, they say.
I recently heard about somebody doing this, and I'd have to go back and remember what I read or where it came from. But I've heard. Oh, I remember, everybody. Okay. So here's what it was. I recently read an article, heard an article, did an audiobook of luxury ski resorts. And apparently luxury ski resorts are increasing in their popularity in 2025.
Okay.
Apparently the ultra wealthy are buying mountains.
You got a membership or what's going on?
I don't have a membership. They're pretty exclusive to get into. One time, this book will kind of walk me through how you could get invited to one. And it was a lot. You had to buy a house in this particular zip code.
Oh, got it.
You had to donate $100,000 to this thing, and then your membership was like $20,000.
I've heard of these clubs
like that.
Yes,
But anyway, they were detailing the one gentleman. It was the former CEO of Netflix who stepped down and bought this One Mountain, this book that I was listening to. And they were actually detailing how he's keeping a lot of his wealth. Again, he founded Netflix, so I'm sure that's how he got a significant portion of it. But how he's keeping a lot of his wealth by this buy, borrow. He hasn't passed away yet. He's still alive.
Sure.
But he's buying and borrowing
Uh-huh.
in order to do this. And I thought that was really unique and kind of fun. So yeah, I actually had heard of it, and I just remembered what I was listening to that walked me through exactly that.
You always find the most interesting things to get into.
You gotta listen to them. You gotta watch them.
I'm a YouTube guy. So if you want to find us on YouTube, hit us up at The Banking Bros. The Cash Compound is our community where we have learning, where we have other coaches who are doing what we do, and we help teach and preach this strategy to folks all across the country. So if you are anywhere in North America, we can help you. And by North, I don't mean Mexico. I don't know what y'all doing down there. So Salida. However, if you're in the 48 or you're in Alaska or Hawaii, and if you're above the line, now what is it again? If you're down here, Make America Great, or you're up there in the 51st state. We'll send you to some friends up there in Canada who can also help you with this process of doing what's going on with the infinite banking concept. Now, the reason we were late today, Jesse, you're going to have to speak into this. The reason we were late today is because we were learning about a particular use case that many North Americans need to understand that can be solving their problems actively right now with their income and their cash flow in the save and spend system, and that is being done with debt. So we were on a call with some folks who have used this strategy and put it on paper to help people get out of debt. And debt is crushing many, many Americans. Credit card debts and these crazy interest rates. Me and Jonah were just talking about this, Jesse. I got a new credit card because I'm trying to get these miles, right? Trying to get these miles, and there's an introductory spend amount. So in like 60 days, I'm trying to spend the money. And so basically all of my expenses, right, the bottom of the totem pole, all my expenses that I have are going on the card to make sure I can hit that number by the date to get 70,000 miles. But these credit card interest rates are nuts, and I think it's killing a lot of people. Have you used this process or helped people use this process to get out of debt, Jesse?
Yeah, so debt's definitely the problem. Yes is the answer. So what I would say is most people are in debt. Most people spend what they earn. Was where I was. And just like anybody can get in debt, it's easy to do. It's easy to get into debt. It's also pretty easy to get out of debt. What I would say that we show people how to do, which is superior, is to have a lot more to show once the debt is paid off. So again, going back to what we were talking about, assets versus liabilities, we believe that the ideal asset to pay debt off with is a properly structured whole life policy from a mutual company. And it's a process that you could read about in this Becoming Your Own Banker book by R. Nelson Nash. That's the process that we use. We call it our save and spend system. So we're going to use assets to pay off debt. So you can get out of debt by just, doing the budget or whatever, but you can have a lot more to show once the debt's off, and you can pay the debt off very quickly, which is really cool. So it's just a superior way to not just pay off debt, but to recapture that debt and have a great big asset at the end of the tunnel.
Okay. Shout out to our TikTok fam out there and our Instagram live audience. So you can put stuff in the chat as well. We'll throw it up on the screen. We won't embarrass you, but we'll help you answer those questions. Jonah, for the first time in this particular broadcast, Jesse mentioned the product. He mentioned properly structured whole life insurance.
Yep.
And a lot of people tune out, tune in, twist and turn when they hear that because they don't really understand, well, what in the world would insurance, life insurance, whole life insurance, properly structured whole life insurance, What in the world does that have to do with everything you've talked about so far? Can you help us out?
Yeah, I mean, the cool thing about it is, so I've got a YouTube video that's coming out relatively soon, and I talk about 3 major instances, like in the pop culture space, where they used whole life insurance that you just might not be aware of. So I talk about 3. Okay, so the first one is Jackie Robinson. Jackie Robinson, if you don't know, now you know. He was one of the, if not the first African American baseball player to play in the major leagues. But what a lot of people don't know is that the Major League Baseball took out a life insurance policy on him.
I did not know this, and I want to know.
Okay, so I've got a whole video coming out. You should check out my video on YouTube talking about this. But so I found this article, I found this site, I even found the documents from Equitable Life that were actually sold in auction for $1,600. And I talk all about that in my video. So that's one instance, because again, Major League Baseball bought the life insurance on him, and they bought this for protection. So this is the general use of life insurance here. But there's another article I shared, links in the description of this YouTube video, where it talks about Michigan football and Jim Harbaugh, and how Michigan football offered Jim, the football coach, this very lucrative, a few $1 million contract, and they structured this thing around life insurance, where he could access cash, he could loan money, he didn't have to pay it back till he passed. They could get money the way that they set up the beneficiary, so if he ever does pass, they get recouped all the money. It's a really cool article that ESPN put out, and so I posted that in my video also, because I thought that was very unique, a use of life insurance in order to pay someone. So therefore, life insurance must be generating some sort of money.
Well, I'm going to help everybody. If
right?
you are watching us visually here, I got the 3-cup setup on the table, and that's where we codify what the crap is going on in life insurance. So why I say that word all the time, codify, is because it's a really great visual way to understand how in the world money is being used from life insurance. Obviously, I'm not dead. Neither is Jonah. Jesse seems to be alive and kicking. So how are we utilizing this product? But I've got to say, Jonah, it's Harbaugh.
Jim Harbaugh.
You say Harborough all the
fine.
time.
That's how it looks.
It's Harbaugh. Okay, here we go, ladies and gentlemen. 3-cup setup starts out with cup number 1, the red one, and that's for premium, where we deposit some of our income. If you give an insurance company premium, Jonah, and you pay for the policy, what do they promise you?
They promise that one day down the road, if I were to pass away, that my family would not be so sad, because they're going to have a big chunk of change, a big check, a big payout coming in order to help them grieve, in order to help them stay at home, in order to help them pay the bills, in order to help them pay stuff off or buy new stuff or whatever they need to use the money for.
You got it, ladies and gents. Cup 3 is that death benefit. Remember, this is whole life insurance for everybody who thought I just said universal. Whole is a different word, and I didn't say universal. That is a different style of life insurance, and Jesse made it clear. Properly structured whole life insurance is what we're going to use. So there is going to be a death benefit. Jonah said, if I pass away one day, and he's foolish to say that. It's when you pass away in whole life insurance. So when means it's going to happen. It might happen tomorrow. We hope it doesn't, but it's definitely going to happen before you're 150. So when that happens, there is a guarantee of payout.
Yep.
Guaranteed death benefit for your friends, family, church, and charities. Something Jonah has said that is genius. So I say that all the time. Now, the reason that we're talking about save and spend is because now we've saved our money. Everybody understand? Cup 1, premium, the red one. We put our money there. It bought 5, 10, 20 times as much money over here for our family one day. But because we bought it, we didn't rent it. We bought a huge pool of money that we are going to continue paying for with premiums. We'll have an ever-increasing pool of equity. Cash value is the net now of cash from the future gross later. So we represent that in the 3-cup setup with the cup 2 green one. And this green money is their money that we bought that we're going to spend. We can borrow against a contract and a life insurance policy full of money that the insurance company's promising to our family. We can leverage that throughout our living career because we've bought it from the insurance company. There's no extra credit check for that. There is just a pool of ever-increasing equity guaranteed to be there, and now we can save our money and spend someone else's.
I got a happy song for that. You
Here
ready?
comes the money. Here we go. Money talk.
Here comes the money.
All right, there it is. Jesse, I did
Think
not
about
see
that.
you moving and grooving. Jesse,
What
you got
happened,
rhythm?
Jesse?
I'm a rhythm guy. I'm tapping my feet and stuff like
Yes,
that. I'm
no,
a drum
good,
no.
player.
good.
Yes, he
Very
is
good.
a drummer. Okay, now, Jesse, there's a fourth cup here real quick, though. You said properly structured, and there's one more cup I did not mention. So give us a shot of what's going on in this little glass here.
I see what you did there. Yeah. So these companies that we would get these specially designed policies from have been profitable for over 100 years, right? So longer than all three of us have been combined alive, Jadu, Jonah, and I. These companies have been in business and profitable. When they're profitable, they share those profits with us, which just again appreciates that asset that we have in this whole life policy.
That's exactly it. Let me make sure I get it. Grounding Time Images says he likes the 3-cup explanation. It was very helpful.
Let's go. Well, the 3-cup explanation came out of necessity. Jonah and I were sitting around our coffee table, literally. But we had our meetings at the dining room table of our third partner, Will, for years. And Jonah was actually complaining. And he was saying, man, when I'm on the phone with people, I'm having a rough time explaining to them that when they borrow, take money, get money from their policy, the correct term is borrow against, that they are wondering how in the world does this thing still have money in it? How does it keep growing? And it's like I have to explain to them that they're pulling money from a separate bucket. And the light bulb went off with me at that point. And I said, well, because he was complaining, right? There's my brother here. Show him, tell him it's in a different bucket. Like, just tell them what you told me. I believe you. I'm with you. I'm on your team. Tell them. And that was the genesis of the 3-cup setup. We had to show people that we're going to save our money. It buys us a policy, a big pool of someone else's money. And then we get to borrow and leverage against their pool. And so if we do that and we got $55,000 here, Jonah, what are we going to buy? What are we going to leverage? What are we going to use it for?
55,000?
Yeah.
Probably buy one of them new Teslas.
Okay, we're going to get a new Tesla. We're going to get the X. What is it?
The
S.
I don't know. It's going to be dreamy, though.
Okay.
Like this.
All right, Jonah has a
Yeah.
Tesla. All right, maybe one day I will as well,
It's
and I'm
gonna
going to
be
put
dreamy.
55 down on it. But we're going to borrow against the policy that we have, appreciating asset. Remember, buy, borrow, and then of course we drive around in the Tesla, and we hope nobody sets it on fire because President Elon right now is going rogue. He's out there.
He's
out here.
People aren't liking him right now.
Right.
Hey, we got a comment. Navigate
when-
Your Ventures is
When you
back.
die,
Navigate Your Ventures says that his first policy was a disaster.
oh no,
Bad taste for sure. Now he's got 2 properly designed for high cash value, and it has changed everything for me in the financial game. Now he's trying to perfect it. I love
Okay.
that.
Jesse, jump back in. Properly structured. Talk to this. Talk to Navigate Your Ventures and the rest of the people. We didn't talk totally about how we customize the contract, but Navigate Ventures apparently tried to get into the game with a problem contract. Tell us about it.
Yeah, so when I learned about this save and spend system, I actually already had life insurance that I'd personally gone out and got. It wasn't the right kind, wasn't with the right company. It wasn't built in any particular way outside of just the traditional, okay, death benefit, right? So we use mutual life insurance companies. That's the type of company that we're going to use. And then we do
Got
want whole life insurance. So it's an asset. Again, I'm just using that language. It is an asset. That type of a contract, that type of a whole life insurance policy is an asset. You're going to own it for your whole life. And it does need to be properly structured, where you have the flexibility, where you have the control, where you have the contractual right to be able to fund that in the way that you want, to be able to access capital against the value of that policy in the way that you want, for going out and buying a car, for going out and paying off debts, for going out and financing a real estate investment that you want to make, for growing and scaling whatever business you happen to be in. So it just has to be built the right way, We have one-on-one private consultation calls with our clients where we can build it for that particular individual yet furthermore. So mutual life insurance company, whole life insurance structured for the individual.
Love it. So all three of those things are important. Navigate your ventures. You know that, but a lot of people out there don't. So they're headed toward the wrong type of company, the wrong type of contract, and the wrong type of customization. And they'll get into the pickle that you were in. Now,
Okay.
Jonah, here's a question.
Hold on, we got
You good?
to address Shane here.
Shane.
Shane Hollingsworth over on YouTube says, do you have or recommend a spreadsheet to drill down a personal spend breakdown?
Oh,
Like income, expenses, debt, remaining cash flow?
well, we use a couple of different, we go about that in a couple of different ways, Shane. We'd love to talk to you about that. But all those words come down to budget.
Yep.
All right. They come down to the word budget. And remember our motto, our mantra around here is code cracking cash flow. And no matter what you decide to do, you got to have cash flow. If you're fat or skinny, young or old, black or white, gay or straight, healthy or non, you have to have cash flow. We're going to help you with that. We're going to walk and talk you through that on a cash coaching call. So there's not one thing. I don't think that I have one thing that I'm sending to people right now or anything like
No,
that.
I don't
Like,
have
just
one
like,
either,
hey,
but we
take
could
this or-
probably get one.
Yeah.
And again, Shane, if you end up in a conversation with us and you kind of walk us through what you're looking to accomplish, or just make another comment, maybe we can help you out right here. That we can probably get you something that'll be really helpful. Okay, so here's what we did earlier in the week. We went out to our followers, our subscribers, our group members, and we posed a few questions. And so what I want to do now is take a quick second to tell everybody what those questions were and to list some of the answers from some of the people who are interacting with us online. So this is our chit chat. All right, Jeremiah. All right, Jesse. Earlier in the week, we asked everybody, hey, it's tax time. You probably got a tax refund showing up here shortly. Or maybe, what are you doing? What are you doing with your refund if you're getting it? You going on vacation? You funding a new policy? What you doing? Right? And we got a few responses and some answers. So first thing, let me pose it to both of you here. Any refund?
Absolutely not.
Absolutely not.
Not for me. No.
No
I think
refund.
Jesse had to
Okay.
jump.
Sorry.
He was on a coaching call right now. Remember, jump on our calendars and we'll talk and walk you through things.
Oh, all good. He can
Yep.
jump, and we'll take it over from here. Okay, but we've got a few answers here, so I thought that would be
All right.
fun.
No refund for me.
Couple of group members on our Facebook group, and if you have not joined our Facebook group, you should totally go join it. It's called Infinite Bankers. We have a lot of fun in there, and again, you get to interact with a bunch of people who are doing infinite banking, so you can ask them questions and stuff. But someone from our Facebook group says they bought an AI automation platform so they can relaunch their mobile notary business. It's fun. So they are getting a refund,
Okay.
and they're going to use the refund to launch their business, hopefully to generate more income.
I was
like
trying
the
to
answer.
figure that part I got.
Yeah.
It took me 3 seconds to figure out what mobile notary. I was like, mobile.
I think they're
notary
just moving around.
business.
They come to you with
Yeah.
the notary. Believe it or not, this is
Hopefully they can detail my car as well.
that's not how that works. This is TMI for everyone who's watching or whatever, or just you don't need to know at all. But I totally sent in paperwork to be a notary with a $25 check. Never heard from them again. It's been like 4 years.
Scam.
Been like 4 years. What
you
happened?
moved. You moved.
I did not move. Anyway, we got some other answers here. Okay, so we've got another gentleman in the Facebook group that actually said, he set up an infinite banking policy strictly for taxes. So he pays his taxes quarterly. So 30% of every commission check he gets goes directly into his infinite banking policy. Then he says, I simply take a loan to pay the taxes and I pay back in all year. So we pay the loan first, and then we drive the rest to the paid up additions.
Wonderful. Okay, that man knows the strategy of the save and spend system. And he introduced, Jonah, for the first time maybe on our call today, what banking is all about. We have said the word infinite banking concept, but he's utilizing his policies as a bank takes care of the problem of taxes. But what we're talking about here is the way you finance projects. You either have to spend your money, you remember your income, what makes the whole world go round?
Yep.
Your income either has to be spent and it cannot earn anymore. That's the cash buyer, and that's who I was. That's who Dave Ramsey told me to be. That's who Mom told me to be when at 18, when all of those credit cards started showing up.
Hey, be gentle. Mom might be watching. She might
That's
think
true.
those
She
are fight
is
words.
She is messaging us. Mom, apologize, but at the time she told me, "Hey, don't fill out the credit card stuff."
Okay. Well,
Okay.
at least she told you that.
Yeah, don't fill it out.
20% would have ate you up back then.
Well, what's crazy is that's not true.
Okay.
Let's go into this for a second as we get into the banking strategy. When I turned 17, 18, they all started coming to the house,
Yeah.
right? Obviously, I lived with Mom at that time. And she was like, "Hey, you need to build your credit. You need to do it. You need to do one." I
Okay.
don't do paperwork. You know that now. This was all the way back to 2001.
you might got to learn to fill out some papers.
I don't do paperwork. So I never did it. Then a year later, I've never done it. She hands me a book, Dave Ramsey's book,
Okay.
Total Money Makeover. He says, cut the credit cards with a scissors.
Yep.
And I was like, man, this man is extreme. I didn't have one, but like, what is he
But
talking
if
about?
I had one, I'm cutting it up.
I wasn't going to cut it up. I had to go back to Mom and I had to put all these City Chase Wachovia
Yeah.
back then papers in her face. Like,
Carolina First.
right. What you going to do now?
Uh-huh.
Because I was like, am I supposed to get one or am I not? You told me. And I didn't understand the strategy. So I was a cash buyer for years and years and years. Okay. So cash cannot compound if you spend it on stuff,
Yep.
even taxes. But if you keep your cash, both of those start with a K, keep your cash.
Keep your cash. KYC.
Okay. Keep your cash. If you keep your cash inside whole life insurance,
that
you
a
keep,
test?
save, or put PUT it right here. You buy OPM, other people's money, the insurance company's money, and you can borrow and leverage against it. And so what happens for our listener, watcher, follower on the Infinite Banking channel is he borrows. This is now a banking transaction. He
Yep.
borrows from something he has. He pays off Uncle Sam or Elon, whoever. Over the course of time, he told us right there, he takes new income and replenishes his policy, puts it back to full power, and
Yep.
then pays interest to the insurance company and himself to make everything bigger, better, faster, stronger.
Yeah,
last longer.
LaJoya 1021 over on Instagram said that was a very good strategy. She said nice with a lot of C's and E's.
What's up, LaJoya? Appreciate that. Yeah, let us know which part particular is nice or what's the next step for you, because we can help you do this, or, you know, cut you off at the pass and say, hey, change this one thing about your strategy and you can do it too.
Okay, so we posed this question over on YouTube as well. On YouTube, you can leave comments. So we do have a couple comments. I'll click in just a second. But overwhelmingly on YouTube, we said, hey, are you saving your refund? You spending your refund? You investing your refund? 53% of people said they were investing their refund. Only 40% of people said they were going to save their refund. What do you think about that?
Well, we talk about the difference between saving and investing a lot
Mhm.
on this channel because we want to nuance it. And many people we've learned over the course of coaching people for 7 years in this space is that they're saying saving, or they're mixing the two up. They're mixing the two up. So saving is what I also do with my refund if I were to get it, but I'm going to save it inside whole life insurance, which still allows me the opportunity to invest
Yep.
money here. So my opinion on this is that people are lying because they are not saving or investing.
Yeah,
I
I don't
bet
think
you
so.
they're spending. it.
They're spending. Everybody's spending. Right?
We love you guys out there. We got over 900 people in this community. Come join us.
Yeah,
But we've been on the phone with too many people to
they're
be
not
like,
saving.
they
There's
ain't
no
saving
chance.
this.
Okay, she says LaJoy's is just a nickname. Haha. And then she's asking a question. She's saying, hey, what can we actually tell her about participating or non-participating life insurance? for
Great
whole life?
question, LaJoya. So if you have questions out there on IG at The Banking Bros, drop them in just like she's doing right now. Participating, that actually means dividends, okay? Participating means that you get to be a shareholder of the mutual company where your policy is held.
Or a participant, but I don't think you can use the word in the explanation. But it's a
Sure.
helpful word.
Sure.
You're a participant
Yes.
in the company's
Yes.
profit. is
So
what
when
you
you're
are.
non-participating, that means you are buying
Not-
your life insurance from a company that does not allow you to get the dividend profits.
or you are not a participant because it's called non-participating. And
Why
let me-
you
and let me tell
cracking
you
yourself
something.
up?
Nobody got time for that.
Ain't nobody got time. for
He's just
not
cracking himself up over
participating.
here. All
Right.
right. So a stock company, most commercials you see on TV, you got Flow at Pro, you got the General, you got Mayhem, Allstate. If you're the white folks, and I guess if you're the black dude, the guy with the deep voice, whatever, they're trying
They
to
haven't
appeal
put
to
him in the
everybody.
commercial in a while.
Maybe they got rid of him.
They haven't put him
Maybe
in the
he's too
commercial in a
old,
while.
but too deep out there, Barry White-esque. So if you are with a stock company, most of the time the commercials are with stock companies, they give the profits, the dividends to the stockholders, people who may not have policies at all, but they buy things on the stock exchange.
Yep.
Mutual companies, there are 70 of them left. Okay. There's probably a good dozen that are great for this. We work with some of the top ones and the best. They allow you to be a shareholder and a participant in the profits as long as not everybody dies, not all cars crash, not everybody flushes their phone down the toilet.
Yep.
They're going to have profits and they will give them back to you.
I love it.
Good question.
Hopefully that answered your question. If it did not, let us know in the comments and we'll go back to it. There's a closely related question that actually Kareem just asked over on YouTube. So he's saying, well, hey, which one's the best policy? Should we go for direct recognition or should we go for non-direct recognition?
Jonah, some of these people have been doing their homework today.
Yep.
Okay, so direct recognition and non-direct recognition means how the company looks or does not look at outstanding Tesla loans, right? They don't ask you what it's for. But what, Jonah, what 50 grand? You already bought a Tesla. What's next? What are we buying now?
And I already have my Tesla.
You already have it. You have one sitting in the back.
Yeah, I'll probably do some private lending because I like to make more money. I like money with my it's like syrup on the waffles. I
Okay.
just made that up. It didn't work out very well, but I'd
did not.
probably do some private lending. That's what I like to do because if I've already got the car that I want and I'm in the house and family's good, then let's go
Okay,
make some
so
more money,
take it.
right?
Take that loan. We're going to answer the question for him. Take that loan and you're going to do a
Smart now.
private lending opportunity. And I hope you want to return. Yes,
Would you like to borrow $50,000?
I would.
Okay, but if you get it, you got to give me back $54,000.
Deal done, because I probably can go double 50 in a real estate transaction. So now that we've given you a real life scenario, let us know. Double tap on the screen if you like, love, or learning anything from what we're saying here. But now we have a loan out. So participating, non-participating, we covered. Sorry. Now we're at direct recognition, non-direct recognition.
Yep.
The insurance company is going to take a look at, no, we're back to dividends. Going to take a look at your profit share, right? How long you've been in the game, how much you're giving them. That's going to determine your dividend profit share.
So this is important. This means we're with a participating company.
Got to
Like
be.
last question, right? We're
Yep.
with a participating company. So they want to give you the dividend at the end of the year.
They ask you where they want it, where you want it.
Yep. And a direct recognition company is going to take a look at your cash value and they're going to say, did you pull money out or not?
Do you have money out right now?
Yep.
Not have you ever done it, but if you have money out right now, we're going to change your profit share, your dividend, how you participate.
Yep.
Non-direct recognition turns a blind eye and says, we don't care. We there.
All right. So generally speaking, there are lots of good companies that are going to be direct recognition, and there are lots of good companies that are going to be non-direct recognition.
It's true.
And generally speaking, you can have a great policy that you use very well to accomplish your goals with either direct recognition or non-direct recognition. But if you are starting for the very first time, you better believe that we're going to put your policy more than likely with a non-direct recognition company. And the reason for that is because we are going to encourage you to take the loans. Like, go be a banker, go buy the car that you want, go pay off the credit cards, go set up your family for success. And we want you to get your full share of the dividends even after you've taken the loans. So for us, it's normally non-direct recognition. We want them to cover up like the monkeys. You know what I'm talking about?
I do.
One over the eyes and one over the ears and one over the mouth. We want them to turn a blind eye to the loans we took because we want that full dividend no matter what.
There you go. That's the difference. And we are generalizing some of these terms. You guys are asking great questions in the jargon. I thought jargon meant to like yesterday days old. I thought jargon meant general. Jargon means specific. So anyway, you're asking good jargon around what we're doing in
Don't-
the banking process.
You can't learn a word yesterday, then try to put it in the.
No, I mean by yesterday, I mean like 5 years ago. Like I thought
Yeah,
jargon meant
But I'm saying
general,
that's
but it
not-
means specific.
It's fine. Okay, we got another question
All
from
right.
Navigate Your Ventures. They're saying, hey, they're curious if your death benefit or the available cash value increases if you use your policy for loans and pay interest, opposed to just having the policy but not taking a loan.
Great question again. Navigate Your Ventures is obviously doing this process. If the jargon is too specific for you, remember, we'll walk you through this one-on-one. Okay, so remember that you bought an asset from the insurance company. It's an asset that you own and can control, but maybe you do nothing with it. Navigate Your Venture says, what if I don't take any loans?
Yep.
What happens? Well, number one, it's there for you. Your family must receive this, whoever you want as your beneficiary, 1 or 1,000 people are going to get these dollars right after your homegoing service lunch. Okay. They can call up the insurance company and get the money. Cash value, simply the equity. We put it in a separate cup so you could see it. But cash values how much you could have used yesterday for Teslas and private loans, but you decided to die. So all of it is going to your family, friends, church, or charities. In the types of customization we put in these contracts, your policy is actually getting bigger.
Yep.
The whole time. So there's going to be more equity and more death benefit. It'll move bigger, better, faster, and stronger throughout your life. It'll get bigger and better. But if you decide, Navigate Your Ventures, to utilize the policy like Jonah's deal, or maybe you borrowing $1,000, give it to your son. He's going to buy a new bike, lawnmower, get busy this summer. He's going to repay with the Miss Smith's lawn money. He's going to put it back in his policy with some interest from borrowing it to the insurance company. And the rest of the interest here, we just performed a bank transaction. Everybody see that? The policy now has extra premiums as that interest that buy more death benefit, which means there's going to be more cash value.
That's right.
It got bigger, better, faster, stronger by using it as a bank. A bank is a for-profit organization. It's time to open your doors. Loan, lend, pay back with interest. And that interest as extra premiums and PUAs, you've used the term, will grow and cash flow a better policy for you.
And all the kids around the neighborhood and all the neighbors are going to be so happy because your child's cutting the grass, making the money. And you're going to be happy because if they're utilizing their banking system appropriately, your system got bigger over the summer by financing the transactions that your child needed to do. Or maybe it was the neighbor kid, right?
It's the neighbor kid in my neighborhood. And your son is too small to mow the grass, yeah?
That is correct.
Okay,
I
so
did,
maybe your kid can mow our grass.
He mowed it for the first time last year, not successfully. So I got to wait.
Got
a
it.
little
right.
early.
A little early.
A little early.
Yeah. All right. Good questions out there. Ladies and gentlemen, if you like, love, or learn something, double tap on wherever you are. Send some love or share this information with somebody in your family who's wasting money by putting it in the wrong place or spending it all without keeping at least a portion of the income that comes into your life. Remember, we're not trying to sell you anything. We're trying to help you understand how you can win by keeping the dollars that come into your life,
Right.
growing and cash flowing forever. Forever. If you're too young for that reference, get off my channel.
You don't have to. Please stay and watch. Okay. With that being said, I've got a couple other comments that came in over the last week or so on our YouTube channel. So I'm going to pull those comments up and I want to read a few and then we will give our answers to them. Generally speaking, we try to answer them while we are on this live, or we are going to answer them actually on YouTube or whatever it is. So if you leave a comment, don't think that we won't get to it. We probably will. So this comment came from Tashad2201. It came on the heels of an emergency fund video. And here is their comment. It says, I decided to also put some money aside that would equal a month of pay, thinking that if by chance I needed time off and didn't have any PTO, that I would have extra I could use and not actually dip into the emergency fund. So I think he's saying I've got an emergency fund and I also put a month of pay aside.
I got emergency fund for my emergency fund.
Yeah, that's what he's saying.
Got you.
But I normally have more than enough PTO. But think about if you end up in a hospital or something, or even using PTO and STD I don't know what that is specifically in work terms.
I do. Oh, not in work terms.
Come on. There is a waiting period for the STD, and I wouldn't want to use up my emergency funds.
Okay, so first off, this person is being very conservative in their thinking and planning for the future. That's cool. So we applaud you for that. Applaud him for that. All the kids
like
say.
his post, and then I'm gonna.
Oh, he's gonna respond to you like if you're not listening to us live. Okay, so
applaud him.
Yeah, that's what I meant.
Actually applaud him. I got you.
Yeah.
Here we go. I thought you meant applaud him in the. I'm typing back to him.
Yeah, see, he's doing, but we got you covered out there. We got you covered on the live and in the comments. So just in case you're not live with us right now, which you probably are not. So number one, the savings rate for most Americans is abysmally too low. So the fact that you're saving money for an emergency, I love. But at the same time, I would call this a semi-emergency. You're also trying to be careful of a couple extra sick days. Maybe a car accident or the flu or the COVID and the Rona come back around and you're out for like 2 weeks where you're like, I mean, I'm calling that emergency first off, but you're saying, hey, I have a separate funds for my funds. Totally cool. We, in our episode that we have on YouTube, what's the name of this episode, Jonah?
It was called Emergency Funds 101.
Okay, Emergency Funds 101. We challenge people's thinking in one, making sure they have savings and they have enough. And number two, where they would put their savings.
Mm-hmm.
Remember, the dollars inside your life insurance policy, there's really no dollars inside there, but you can call and get dollars, right? It's a number on a computer screen. Those dollars are liquid. And by liquid, you can get to them within a week or so. The insurance company can beam those dollars, cash value ledger numbers, down to your bank account. Or if you trust the postman, they'll send a check. And so that's where we challenge people to keep their emergency funds. Dollars that can be liquidated anytime, put them in an environment where they're guaranteed to grow, be able to be used with no taxes, no matter how much they grew. And of course, be liquid in the event of the Rona returns.
Modern Fisherman 12 says, "You're killing me, Smalls."
Let's go, ladies and gentlemen. It's baseball season coming up. Opening day has passed, and we got a great minor league team in our community, and we like to go.
So I think they got the reference.
They did, yeah. So that's the Sandlot for those of you.
See you out there.
For those of you who don't know, if you don't know, you must play ball like a girl. So we get excited around baseball season because we attend and hang out downtown in our town quite a bit.
Okay, so MK Santini over on Instagram has a question or a comment. So it says, so the interest you pay for borrowing from your own insurance policy is used to grow the death benefit and the cash value? ? What percentage of the interest is used for growth and what percentage actually goes to the insurance company?
Great question. Love it. So who is that again?
That is MK Santini. And if I'm messing it up, sorry.
Hey, we got you, Santini. We got you. So first off, there's two questions in there in the first one. So the interest you pay. So let's visualize it if that's helpful to you guys. We're going to borrow $1,000.
Here you go.
Okay. $1,000 against our policy. We still have our money in there growing and cash flowing. Is used to grow the death benefit. Yes. And the cash value. Yes. At the same time, it's also true. Second question. What percentage of the interest is used for growth? Yes. And what percentage is going to the insurance company? Yes. All of it is true. Let's walk and talk through it. So you're going to take $1,000. You're going to pay some of that back or all of it back with interest.
So I'm taking my $1,000. I'm going to go join one of those exclusive skiing clubs on
that ain't enough.
It's not even close to enough, according to the thing that I read, but I'm going to try it. So that's what I did with my money. And now during the course of my the next week, the next month, I still work. I still make an income. So I've made a few dollars. Back, and now I want to repay my system. So
now remember, Jonah, I'll be the insurance company. You be the borrower. You be the policy owner.
Yep.
During the time you borrowed against this policy, I have started an interest clock on you.
You did.
I did. And that might be about 5%. We can do that math. Okay. So what that means is if you leave that money out for 365 days, there will then be assessed to the policy I owe you, the money I owe you, 5% on that loan. So how much money is that?
I believe that is $50 on
$50.
my $1,000 loan. And I tried to join the mountain club. It was not enough money. So I just bought my own skis instead. and I'm going to the public mountain, and I'll do my skiing there. Public mountain.
Hide your money, y'all. Poor people out here. Okay, so got it. Okay, so there is interest, amortized interest on your loan, your outstanding loan. Remember Jonah's money that he used to buy way more of my money at the insurance company? It's still compounding. Jonah, tell us what makes you more excited: compound interest, or you get nervous about amortized interest?
I like compound interest.
That's very powerful. And we encourage you to look at the very first calculator example that we have in our saveandspendsystem.com video to understand the difference between compound interest and amortized loans that Jonah has out. $1,000, $50 at the end of the year. So remember, Jonah, if you pay that loan back sooner, it ain't going to be $50.
That is true.
Okay. That's one thing. Number two is remember who's facilitating your experience with your policy: the insurance company. That's growing your dollars, compounding, nonstop, constant compounding, uninterrupted compound interest, and paying you dividends. Are you okay with that company getting the $50?
If I have to give it to them, I'm okay with it. But I'll probably try to repay my loan, mid-year.
But even if you don't, remember,
okay,
they're the ones who are
because
paying you the compound
I
interest.
benefit from
Yes,
this, so
you
it's
benefit.
It's okay.
They're the ones facilitating your banking system. If you read the book, can we reach it from here?
Yeah, we got a bunch of them right over there. Reach
Okay.
back.
Here's your handbook, ladies and gents, okay? Becoming your own banker. Remember that the insurance company is facilitating your bank. A bank is a for-profit organization, and it's working in your favor. Great question, great comments, great confusion from most people, but I am okay earning compound while paying amortized and getting dividends and paying back with interest. So whatever is above and beyond, which we highly suggest, whatever is above and beyond what the insurance company levied against your lien, against your policy, is going to go. Give me the money back.
How much? So
1,000
I'm going to give you 1,000. There
was
you go.
the loan. So now your policy is restored to full power.
Back to 1,000, baby.
Okay. What about some interest?
I'm going to give you some interest. I'm going to do 1,000
Okay.
more.
Some of that, I'll rip it in half. Some of that goes to the house.
Okay.
Good point. And the house pays you every year and grows your system. And some of it goes right back here. Interest. We've restored to full power. So the extra interest goes here. Jonah's going to be a good, honest banker.
Yep.
Which grows and cash flows more
Even
for
more.
better chance at the ski club next year.
Yep.
Great stuff, man. Did that answer your question? Let us know in the comments.
MK
if that
Santini,
is
let us know
helpful.
if that was helpful for you. With that being said, it might be time to come to a close a little bit.
Okay.
Here. So if you are watching for the very first time, we had a couple people that were definitely watching, not their first time, but a couple of names I hadn't seen before. So we appreciate you first. But second, let me, okay, we got MK Santini says, thank you for the explanation, guys. I'm very new to the subject. It was great.
That was a great question. That was not a new question. That was a
good
thinking
question.
man's question.
That
Good
was
stuff.
a good question.
Yeah.
So here's what we are requesting from everyone. We are requesting to talk to you in real life and live in color. So I've got a phone. He's got a phone. And our phone numbers, our calendar is actually in the description of wherever you're watching. If you're on Instagram, it's the link in the bio. If you're on YouTube, it's the link in the bio. If you're on TikTok, it's the link in the bio. And what we're asking is book a call with us and jump on our calendar so we can talk to you. And we'll literally walk and talk you through your questions, your concerns, your thoughts. It's all free. It's just us walking and talking you through. So that's what we're asking you to do. And then if it makes sense for you to keep moving forward, that's amazing. We'd be more than happy to help you. Still free. I know I set it up like it wasn't going to be free or something. Still free, but we'd love to talk and walk you through moving forward if you want to, or if you need more time, if you need resources. You're like, hey, you guys held up that book, but I don't know what book that was. How do I get that book? We can get you links to the book. It's on Amazon. If you're like, no, I read that book, but what about the other book? We can talk to you about that book. And you're like, well, what about the book you guys are supposed to be writing? We're working on it.
Yeah.
It's been a while.
Yeah.
We're working on it. But all that to say, we'd love to chat with you. That's our request. Click the link in the bio. Book a call with us. We'll walk you through it. Not only that, but you can watch our full-length explanation of the infinite banking concept in detail by clicking that link also. So just in case you're a self-starter, If you're one of those folks who likes to learn on their own time, then you can watch our 55-minute long full explanation of the infinite banking concept. And then you definitely want to book a call with us because you're going to go, oh, now I'm
ready. I'm ready.
Now I'm ready to talk to them.
So we'll be back to see you next Thursday live at this hour. There are other sporadic live events that I tend to do on TikTok. If you want to follow us at the Banking Bros or the Cash Compound, we've got 2 handles there. But noon to noon 30 Eastern time next Thursday, we'll be back with more of our coaching community. And we'd like to invite you into that culture of a live experience and anytime on our platform. So hit us up on Facebook, join our Infinite Bankers Club and community there. Ask your questions all the time. We'll hit you next week, and we'll see you then for more code cracking cash flow.
See you.
You are now tuned to the Banking Bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.